Hello everyone, this is Jordan, and today I have another precious metals video market update, and in this video we're going to focus on the gold stocks. And here's a chart which many of you have probably seen in my earlier work, and what we're looking at here is a chart of all of the worst bear markets in the gold stocks, and we use the Barron's Gold Mining Index up until 1999, and then we use the Huey Gold Bugs Index. And as you can see, the worst bear market was 1982, worst in terms of price, and that came after a 20-year secular bull market. That 1980 to 1982 bear market declined 72%. Now we're currently down 68%. We're right in line in terms of price and very close in terms of time with the 1976 bear. We're also very close to the 70 bear. And as you can see, in terms of price, these bear markets tend to average 65 to 68% or so. And if you look at the three bear markets, which lasted longer than this one, and you look where they are at this point in time, all of them were down less than 50%. So given that, it's very unlikely that this bear market has much further to go in terms of time. And we already noted that in terms of price, the worst bear market was 72%, and we're at 68% right now, which is basically the average for all of these bear markets. So it makes a very compelling argument that this bear market is just about over. So when is it going to end, and at what price it's going to end? Well, nobody knows, but here's another chart that might help answer that question. On top, we have the Huey Gold Bugs Index, and on the bottom, we have the GDM Index, which is the forerunner to the current GDX ETF. And these are monthly candles. And what we see here is the gold stocks are essentially approaching major multi-year support. So these charts tell us that there's more downside, but they also tell us that in the coming months, we're very likely to see a bottom. Now, here is the Huey Gold Bugs Index, and this is a daily candlestick chart. And we made a low today of 202. And as you can see, in the last 9 days, we've only had one white candlestick. So in the short term, in the very short term, I should say, the gold stocks are very, very oversold. And, we're looking at targets of 190 and 175. And today we made a low of 202, as I said. So if we do get a little bit of a rally over the next week or so, I think that could set up the final move down to those targets that I mentioned. But if I'm wrong and we continue to plunge in the next couple of days, then we're already so very oversold that if we do continue to plunge over the next couple of days, then that could be the point to close your hedges and close your short positions and start to go long. And I know I said I was just commenting on the gold stocks in this video, but of course they're influenced by gold. And looking at gold, gold hasn't made a new low yet, but as I've said, I believe it's going to make a new low, and you have very strong trendline support in the low 1100s. The 50% retracement of the entire bull market is at 1087. So you really have to keep an eye on those targets. And if we do see the gold stocks plunging to those targets, with gold plunging below 1100 at the same time, then that could be the capitulation which sets up this final major bottom. And that's all for today. Go to my website, thedailygold.com. You can sign up for my free newsletter and also check out my premium service. Thank you very much for watching.